Morning, Steve Free in Chicago with the morning grain comments. Well, happy Monday. Friday, the big news to the grain markets was that U.S. and China had come up with a phase one deal. And there were a lot of skeptics, but it appears like the deal will be signed early in 2020, and then 30 days after the signing, the Chinese will start buying U.S. goods. They have agreed to buy $16 billion in addition to the $24 billion that they bought in 2017 with an option to buy another $5 billion. So we'll see again what they will buy and when. The U.S. Trade Representative had said that they're going to keep the commodity list private until actually the contracts and everything is signed. Many people believe that they'll at least buy soybeans, but they could also buy corn, they could buy wheat, they could buy DDGs, they could buy ethanol, they could buy dairy products, they could buy hogs, they could buy beef, they could buy poultry. We already know that they have relaxed tariffs on beans and pork, and that they are looking to buy chicken parts. So all these things have to come into play, and it could be a big deal for U.S. farmers. Now, the funds are short beans, meal, and corn. They're long wheat and soybean oil. They're long, almost a record amount of soybean oil. So the big question is, do they slowly cover up these short positions in corn, beans, and meal? We've had two rallies in beans in 2019. Both of them were $1. And so if we look at them covering their shorts, that would put March beans at $9.70. We've had one rally in corn in 2019 that wasn't necessarily big kind of weather concern related, and it was 50 cents. So that would put March corn at $4.20. It would put the nearby contract at December maybe at the $4.08, $4.05 area. And we believe that farmers probably would sell closer we get to those price levels. People have been asking this morning, what about the July D20 corn spread? And again, we've been as high as 54 over. We've been as low as minus 13. So if we get a 20-cent rally in corn, that would put the spread at plus 20. Again, big crops in 2020 could make all these price levels, if achieved, really good sales, especially for farmers that want to lock in prices because of this rally. The wheat market could follow corn and could rally, let's say, to the 570 area on Chicago March. Other than that, we'll be watching cash basis levels for farmers selling. South American weather, Brazil weather's okay. Argentina will probably need some rains. And then we always have the drama in Washington and see what impact that's going to have on the stock market, how impact it might have on the dollar. But from a commodity perspective, at least in the grains, the announcement of a deal is a positive thing. Now, there's still tariffs on $300 billion worth of Chinese goods, and if they don't meet the requirements of the deal, the U.S. could, at least this president, could put back the tariffs on it as a penalty for not meeting the deal. So again, we haven't got a signed deal. We don't know what the commodities are, but this should be positive, and funds should continue to cover their shorts. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.